Okay, 20 points higher. You're with us here on Mid-Cap Radars. The market actually is not flat. Compared to the big 100-point plus gains, many 100-point plus gains that we've had, you'd say 20 points is flat, but it was flatter still with a between 5 to 10 point change for a long time, and it's starting to pick up once again. The Bank Nifty has been doing very well all through the day. It's up a full 1% at the day's high. And I think the broader market, the mid and the small cap indices are right where they were, which is down about 0.5% and 1/3% each. So that's where we are at this point in time. There are some stocks which are moving around. Yes Bank is up a 3% plus. It's a sudden surge which we are seeing. And Yes Bank at 243 essentially is taking out the recent swing high. 241, 242 essentially is the price Yes got to. The day this new CEO's name was announced in a release to stock exchanges, this was more than a couple of weeks ago, and it's finally back at those levels and taking it out. We'll get a technical opinion on this and other stocks in just a bit. With me, my colleague Sumaira. Hi, Sumaira.
Hi, Prashant. Good afternoon to you as well. And, I'd also be keen to see what happens in Europe today. Remember that second meaningful vote on Brexit has failed by a huge margin. There's a no-deal vote that the UK MPs will be voting on today. So let's see. Ahead of that, the market's just a tad bit nervous. So the FTSE is down about 0.25%, but the other markets for now seeing just about a tepid opening. We'll talk about that in detail in a bit. First up, our top stories. The Lal Street Bulls take a pause. Asian markets end mostly lower on uncertainty over Brexit. Key indices trade with marginal gains. Mid-caps take a bigger hit, with the index down nearly 0.5%.
Morgan Stanley's Rhythm Desai says earnings are on the cusp of a 5-year growth cycle. Bets high on real estate stocks in particular.
Real estate stocks are weak. CNBC-TV18 learns that the GST Law and Fitment Committee have proposed a reversal of the input tax credit by real estate developers on input goods and services lying unused as on the 31st of March.
SpiceJet feels the heat as India joins a host of other nations in banning operations of the Boeing 737 MAX 8 model aircraft from its airspace effective 4 p.m. today. This ban will result in a drop in capacity, which will support yields and favor other players like Indigo.
And oil marketing companies recover from the day's low, pressured by higher crude prices. Metal stocks like Vedanta, JSW Steel and Tata Steel also feel the heat.
Okay, let's get some calls and trades out of the way. Sandeep Wagle is with us today at 1:30. Sandeep, thanks very much. Afternoon. Again, things are starting to move. 30 points on the Nifty. What would you do?
Afternoon, Prashant. I think the Nifty is a little range bound, but I am still positive. The positive move will continue, maybe sideways move for the day and then over the next couple of days. I see targets of 11,420, 430, another 100 points coming in and not more than a 30-point correction. Stock specific, I would go with a buy in an IndusInd Bank. The banking space is looking good. You talked of Yes Bank. I have a buy in an IndusInd Bank. Stop loss of 1609, target of 1663, and a sell in a Apollo Hospital, stop loss of 1135, target 1090.
Okay, two specific trades. Yes is surging. We just pointed that out to our viewers. Anything to do here?
Prashant, I would be a buyer. It's given a very clear breakout. Your comment was absolutely right. At 240, it has broken a very strong and an important resistance. I would buy it at the current levels of 244, 245 with a stop loss of 240. And I would talk of a move towards 255, 256. And this should come in by end of the day or maybe by tomorrow.
All right, Sandeep, thanks very much. Any specific disclosures?
Well, I do not hold any positions in the stocks that I have discussed. Our clients may be holding positions based on the view we have given them.
All right, thanks much. Let's shift focus then to what's happening globally, because this uncertainty regarding Brexit is what a lot of global investors are focusing on. Gavin Friend, the senior market strategist at National Australia Bank, now joins in. Hi, Gavin. Good morning. Good afternoon to you as well. What are the global markets now pricing in with Brexit? We've seen the second meaningful vote get rejected. I mean, not as bad as the first one, but still quite bad. What are markets pricing in now, and what might be the best case scenario?
Yes, good morning from London. As we know, the next stage in this VEX process is going to be today. Parliament will vote to decide whether the UK leaves the EU without a deal or not on the 29th of March. You will know there is a strong parliamentary majority to make sure the UK does not leave without a deal, so that should be good in terms of a safety factor. And we expect that to move through. There's no indication at all that Parliament will, make a reckless decision and decide to leave without a deal. And then, that being the case, tomorrow, Thursday, Parliament will take another vote, and this time to extend Article 50 through the end of the month of March into April and May. Now, that means technically Theresa May, the Prime Minister, will have to go to Europe and formally request an extension. Which she will do. The EU, all 27 member states have got to agree this, and I think there's going to be some sort of protracted debate there, because the debate around this is Europe wants to know, well, what's your reason for extending? How long do you want to extend it for? And all of that is complicated by the fact that the EU has parliamentary elections itself on the 23rd to the 26th of May. So I think at the end of the day, there'll be a big debate about this. There is an EU-UK summit on the 21st, 22nd. That's the end of next week. And these issues will get sorted then. The UK will be granted an extension, whatever you read, because the EU does not want to be seen to be responsible for crashing the UK out. But the UK's got to be clear on what it's going to use that extension for. And I think what you're going to see then is a series, because Theresa May lost her vote yesterday, Parliament effectively is taking control of the process, and Parliament is now going to put forward all sorts of bills and amendments and motions to try and see if there's a parliamentary majority for any particular type of Brexit. So we're going to see things like, should we try the Norway option, which is, to follow Norway or a Norway plus, not joining a customs union, allowing free trade and that kind of stuff, but be much closer to the Europe than the deal that Theresa May is looking at. Another option might be a customs union. Now, I don't think there is a parliamentary majority for any of these things, so we may go through this exercise during the end of this month and through April and into May even, and find there's no majority for that, and we end up Theresa May going back to the people and saying, do we have a second referendum? And, the question will be something like, do you want my deal, or would you prefer to have the status quo, i.e. not leaving, or maybe even a hard Brexit? So these things are all still on the table. We're just pushing the argument a little bit further out. The other alternative is that nobody can agree anything, and we end up kicking the can all the way down the road to the end of the transition period in 21 months' time, in December 2020. But business doesn't want that uncertainty. Business investment has crashed in the UK. It's really not helping the economy, and businesses want the certainty of some sort of, positive decision on this.
Right. Gavin, just to come back to what you said, very well sort of described. You've kind of sort of put us, you've described what may happen all the way into next year and even beyond that. But the question, okay, let me just ask you this. The Times actually is reporting that the EU is preparing for a delay to Brexit of at least a year. What will this mean? So we're essentially now looking at a delay until March of next year or even longer. This is a source-based report this morning, but likely?
As I say, all of these things are going to be debated. I think it's not credible. I mean, we're going to get lots of these stories about, is it going to be 2 or 3 months? Is it going to be a year? Is it going to be 21 months? And we're not going to get an answer to that yet. Initially, the UK has got to try and to see if there is a way through this, to see if there is a parliamentary majority for any one particular type of Brexit. I think the idea is Parliament overall still wants to get a deal to leave, to respect the 52-48% referendum result. Of course, there are parliamentarians,
but Gavin,
that actually want to stay.
But if the vote today is defeated, as is most likely, the extension is I think the extension is going to be sought on Thursday, right? Via a separate vote. So yes, then only after that can the Parliament put up proposals for a different kind of Brexit, etc. But first there will be an extension.
Well, that's probably the way it'll go, but we could see some amendments of that tomorrow already. So we might be seeing some of those alongside the vote to extend. Okay. I think in the first instance, though, the idea of 1 year extension, to go back to your question, the story in the Times, we're not going to be going there yet. It's too far away. The UK is going to be trying to see if it can do something in the next 2 or 3 months to see if we can get a way out of this before the EU elections on the 23rd, 26th of May.
Okay, so you're saying fair enough. And
yeah, I mean, for the pound, all of this story should, in the short run, keep the pound reasonably well supported, because the idea is that Parliament will vote not to crash out at least at the end of March. That doesn't mean the UK won't crash out in May or June, but it's unlikely. It's unlikely that parliamentary majority will ever kind of dissolve, and so it'll be there. And the idea will be that the Brexiteers, the hardline leavers, will be brought back into line and perhaps take Theresa May's deal at some point in late March or early April or May.
Okay. Fair enough. Gavin, it's a pleasure. Thank you very much. We've covered all angles to this one. Thank you for your time and taking us through what's likely as far as Brexit is concerned. I mean, in terms of options and possibilities, it's a complete mess, but from a financial market perspective, the pound, which is, it has been absolutely well supported, has been doing great for a situation like this. Gavin expects that to be the case, that to continue to be the case, and some concessions will be made. The hardliners will be brought in line, and that kind of thing over the next couple of months. But the vote today is most likely to get defeated.
Mid-cap radar, well, for now, the market's holding up, actually. Just the mid-cap index down about 0.5%. But straight away on to a CNBC-TV18 exclusive, and this is that much talked about NIT Tech's stake sale. Could it now be imminent? We understand from sources that the board of NIT Tech is in the process of finalizing a date to consider a deal with Baring PE. Kritika Saxena is here with the details, and Nimesha will also join in to take us through some of the finer aspects. But first, Kritika, over to you. What's the news?
Well, if you remember, we had reported in Feb that Baring PE had emerged as the final frontrunner and had finalized the deal to buy a controlling stake in NIT Technology. Just to give you a perspective over here, 30.61% is what the NIT Technology promoters hold, and their entire stake was up for grabs. And we understand that multiple players have thrown their hat into the ring. This included a couple of IT players, this included PE players, and in Feb, Baring Private Equity had emerged the frontrunner. The valuation was being discussed and the pricing was being discussed, but in Feb itself, Baring PE Asia had cleared the deal. We now understand that NIT Technology Board is also likely to be meeting very soon to clear the deal. We understand from our sources that the price has been finalized at 1420 to 1430 rupees per share, which is much higher than what the street was expecting, and it is a premium to the current market price. A binding term sheet will be signed once the board gives a nod. So in the next couple of weeks itself, within this month, we are expecting the board to meet and a final term sheet to be signed, and with that, we understand the exact management structure, etc., is going to be finalized. So, from what I understand, Baring Private Equity wants to retain the current NIT technology management, but yeah, maybe there could be some kind of change in terms of the board level, etc. In terms of comments, NIT Technology said that they did not want to comment and there's nothing to report, and Baring PE Asia said that they did not want to comment on the story.
Kritika, thanks very much for that. Remember, NIIT owns about 23.5% in NIIT Tech. So what will this deal mean for NIIT Limited? Nimish is here to tell us exactly that. Nimish.
So, Prashant, as you rightly pointed out, NIIT Limited, the listed entity, owns 23.5% stake in NIIT Tech. And as what Kritika said, the deal is likely at around 14.30 rupees per share. If you look at that calculation for NIIT Limited, what this means is, I just looked at an average price of 1,400 rupees, and at that price, the inflow into NIIT Limited would be close to 2030 crore, close to 2,000 crores. Now, if you look at current NIIT market cap, which is around 1,550 crore. So effectively, what this means is, if you look at the per share calculation, close to 100 rupees per share is what NIIT Limited will gain or will receive if NIIT Tech deal is happening at around 1,400 rupees per share. Remember, in NIIT Limited, the promoters own 30% and the rest is owned by institutions. So once the money of this 2,000, if you look at even the effective tax rate of 15%, if you remove that 15% in that, the net of tax, the inflow could be close to 1,700 crores. So that works out to close to 100 rupees per share in terms of inflow that the NIIT Limited shareholders will get. Now, the key question will be how the promoter wants to distribute this money, not only to themselves, but to the other shareholders as well. So, one of the buzz in the street is that maybe after the deal gets concluded, NIIT will announce a special dividend, to distribute the money back to the shareholders, including the promoters and the shareholders. So, from that perspective, it's also important from NIIT Tech point of view that the current market cap is 1,550 crore, and the inflow net of tax, as and when the deal happens with NIIT Tech, could be upwards of 1,700 crores. So that's the reason why NIIT Tech should be in focus, because close to almost 100 rupees is what they gain from selling out NIIT Tech to Barings PE at a price of 1,400 rupees per share.
All right, fair enough. NIIT, I think Limited is up about 18% this month. So yeah, it's done well. And critical for shareholders, of course, will be how that money is utilized, as Nimish pointed out. The hope would be that it gets paid out as a dividend to all shareholders, including promoters. That would be the best outcome for minority shareholders as well. Thanks very much, Nimish and Kritika, for running us through that story. Blackstone-backed Embassy Office Parks will launch India's first REIT or real estate investment trust in just a while from now. Sonal is here to tell us exactly, the outline of what this REIT is, and to run us through some basics as well. How does the REIT structure differ from others? Sonal, take it away.
Thanks a lot for that, Prashant. Well, firstly, I'll start with what does the REIT really mean? Well, REIT, that is Real Estate Investment Trust, is a company that holds and operates income-producing real estate. And this real estate could be any commercial building, hotels, hospitals. So in simple terms, it is like a mutual fund, but the underlying asset is a real estate. Now, if you want to invest in a real estate investment trust, you should have a minimum corpus of around 2 lakh rupees. And that is the kind of amount that should be minimum in terms of investments. Also, there are talks that once any of these REITs get listed, this amount could be reduced to 1 lakh rupees to make it more accessible to investors. But nevertheless, right now, the amount is around 2 lakh rupees. And where does the REIT invest all the money that they get from the investors? So around 80% of the money has to be invested in completed and revenue generating projects, and 20% can be invested in something like a development properties, mortgage-backed securities, and corporate debt of the real estate sector. And what do the investors earn out of it? Well, 90% of the distributable cash flows have to be given away to the investors on a 6-monthly basis, and that is something, the interest income that is earned by the investors. Overall, experts expect that the rental yield from commercial property is at around 7 to 9%, and the capital appreciation is around 4 to 7% in the long term. So that is the kind of returns these real estate investment trusts, they give to the particular investors. In terms of taxation, if they redeem all these units, they will be charged a capital gain tax, and otherwise they'll be charged on the interest income that they earn from these REITs. But why are these so much in demand right now? That is because investing in real estate is not that easy, because it is an illiquid asset and also requires a huge amount of money. So with REITs, it will give more access to the developers to get more funds, and also it will provide easier access to investors to a wide variety of assets. Going forward to the point of the new REIT that is launched, it will be launched by Embassy Group and backed by Blackstone, amounting to around 4,750 crore rupees, and it is opening on 18 March, goes on till 20th March. So it will be interesting to see how much attraction does it gain from the investors. Back to you.
All right, Sonal, thanks very much for that. Let's take a
52 points on the Nifty. So this is certainly looking better and better. We are at the day's high, and the surge is very, very visible. Before I play out some sound bites for you, I just want to point out what is doing well. Look at IndusInd Bank. Yesterday it was up 4%. I think by close was up just under 4%, IndusInd Bank that is. It's up 4.25% now. So that's a strong 7-8% move in the last 2 days. And today, there's still time left. Yes Bank, of course, 3.33%. HDFC Bank should also come up on your screen. It was up 2% yesterday. Another 2.75% today. That is HDFC Bank. So there you go. Yeah, at the day's high. There is Bajaj Finance, which is up 1.5%. And iShares, which is up about 1.5% as well. So things are picking up. It was looking at like a flat day consolidation after days of gains, but well, the market's not holding back. And actually, even the broader market is almost at the day's high. Small cap index at the day high, mid cap index almost at the day's high at around 2 o'clock. Well, it's a wrap here from Sumaira, me, everyone on the team. We're going to leave you with some market opinion that we got. Morgan Stanley's Rhythm Desai on markets, earnings growth over the next few years. We spoke with him earlier in the day. Here's a piece of that conversation.
Nifty was very resilient through this phase. It hardly reacted to what I would say was a pretty challenging macro environment. Nifty should have behaved more poorly than it did. It hasn't actually behaved that poorly. In fact, if you look at it from the beginning of October to now, the Nifty is actually also flat against emerging market. 2 years on, more capacity has got utilized in the private sector. So right now I would estimate, or I should say guesstimate, that utilization rates are in the low 80s. And another 2 years they'll be in the low 90s. Now it's a time at which capacity needs to come on stream. So sometime in the second half this year, post-elections, I think the private sector will start debating capex. And in 2020, I think we should get some capex from the private sector as well. I think we are at the beginning of a new fundamental cycle. Now these are long duration cycles. They tend to last for 5-7 years. So arguably, I would say that we are at the beginning, or maybe a few months into a 5-7 year cycle, in which I think we should witness pretty strong earnings growth. It will not surprise me if earnings put in a 20% CAGR over the next 5 years.